Welcome to today's podcast. We're going to do something a little bit different today, and we'll probably call it Random Pod, something like that. I'm sure if we called it our pod, Apple would get mad. So we'll stick with Random Pod. A lot of times, Manisha, you and I have talked about this. We were talking about it earlier this week. Sometimes, we spend a lot of time and effort building up these podcasts, and frankly, sometimes there's just as an advisor, you have so many things happening at once that it's good to just kind of fire off and knock these things out, right? So that's really our approach today. Is there are several different topics we're going to hit. It's a little bit different format than we've done before, but on that note, Manish, you wanna start with the CARES Act and touch on that?
Yeah, I mean, full disclosure, neither you or I are really experts on this thing. It's humongous. There's a lot of details. For advisors, Kitsis, once again, is a huge resource.
Absolutely.
They took the time and effort to dive into this. So definitely go check that out. We'll put it in the show notes. Tons of information, not only for small business owners, but also for your end clients. We want to touch on two things. Number one is the Payroll Protection Act, or PPP Protection Plan or whatever. This could be something for advisors to look into. Essentially, if you can make a good faith sort of argument that you have been affected by this COVID-19, you can apply for a loan that equates to 8 weeks of payroll. Actually, it'll be 2.5 times. Let me just make sure your monthly payroll up to 8 weeks. No more than $10 million. Most advisors would be, much less than that. And if you spend it on certain items like payroll, medical premiums, etc., over that 8-week period, it can be forgivable. And it sounds too good to be true, but frankly, it isn't. And so they're starting to accept applications April 3rd. We're recording this on the 2nd. So I'm sure there'll be a long line of people trying to get in on this. Any thoughts on your end? Have you read about this PPP thing and at all?
Yeah, well, I have, and you sort of in our beginning of our discussion, you were looking more at the from a business standpoint. I was taking time to look because I'm talking to advisors so much. I was taking more time to look at some of the individual participant, client. I shouldn't say participant, but client details. The whole payroll thing is pretty interesting. I did see there's some caveats on some of the revenue and things like that. This is definitely a big topic, and so it's worth, as you mentioned, it's worth starting with the Kitsis blog post, which we'll put in the in our show notes. But a couple of things I wanted to touch on that stood out to me, unless you have more that you wanted to talk about on the payroll piece.
No, I mean, I think the one thing is, even though you may not be a restaurant and you don't think you've been affected, you could be affected as an advisor. Whether it's conferences you're supposed to go to meet clients, or meeting clients in general, seminars, meetings. Maybe not so much as a fee-based versus commission-based, but that's to each their own. That's subjective. You have to figure out if you were not affected, but we can move on.
Right. Well, an important piece to that, though, is that even if you as an advisor, your business is not one that qualifies, the reality is you probably have, as an advisor, you probably have small business owners as your clients. And being up to speed on this, even if you're not the, quote, tax guy, you should be aware, because obviously it's a conversation that you could really benefit your small business owner that owns the restaurant, that owns the little office, that owns the UPS store,
definitely helpful.
So
it's definitely helpful to know this.
Yeah. A couple of the things for an individual client perspective that really stood out to me was that the 10% penalty is being waived if you took distributions from your qualified retirement account. And I think that's interesting because obviously waiving that penalty, it's sort of the short-term gain, long-term pain, right? I mean, I understand if people need to eat and need to pay their rent and those sorts of things. Well, obviously they got to do what they got to do. And we're all here to help in that manner. But it begs the question, from a financial planning standpoint, this is a great time to talk to people about, hey, let's remember we said 3 to 6 months, maybe we need more than that, right? Anyway, but that's one item. And a second item, just sort of a quick hitter, is that I don't know if you caught this or not, but RMDs are being waived for 2020. And not only are they being waived if you haven't taken it yet, but there's a provision that allows you, if you had taken it, to put it back. And so for clients that, that are in that mode where they're supposed to take it but don't need to, I mean, it's, is it helpful? Well, it means they have less money in their pocket, but the reality is if they didn't need to take it, this keeps them from paying taxes on something that they didn't need. And
yeah, that's huge.
I think that's pretty cool. And for those very few that are lucky enough to be turning 70 and a half and their birthday falls where they could have waited and been able to take 2 in the same calendar year, you effectively get to waive both. That's
interesting.
There's a lucky small percentage that are going to hit that. But again, those are two very simple things that are, again, we're always looking for value adds as advisors, right? We charge a fee. What do we do? Well, guess what? These are value adds. So I see the CARES Act as a great opportunity to add more value because you're aware of what's going on and talk to the clients. So on that note, Manish, I know you had another topic along this same line with the SBA loans. You've got more. I don't have a lot there. You do. So fire away from that.
Well, first and foremost, everything is being driven through the SBA for all of this stuff. So even the payroll protection stuff, it's all being driven through the SBA. So just like FEMA's handling some of the emergency responses to the COVID crisis, the SBA is handling things for small business when it comes to helping out here. So one of the things that I've read on multiple sites, including the actual bill, but I haven't been able to confirm with a bank, is that if you have an existing SBA loan, the SBA apparently is going to pay 6 months of principal and interest on that loan. It will not have to be repaid. It's not deferment. They are actually paying it. And so that is huge for people who have these loans and are affected. And even if you're not affected, I don't think they're means testing this at all. They're just saying, look, 6 months, here you go. And so that's one thing. The second part of this is, if you have an SBA loan, and let's say this has a lot of catches to it, maybe they don't do it, banks are willing and able to renegotiate terms. I think the government's going to play a backstop in this role and allow you to possibly get your rate lowered, possibly spread out the term. So if you have an SBA loan, if you have a client with an SBA loan, I think it's important to reach out and make sure you're on top of it for them.
Yeah, that's a great advice. Like anything, right? You don't know what you don't know, and I think digging into this is worth. Again, it's just another value add. One of the things I will do is in the show notes, we'll also put a link to the CARES Act that was provided by the U.S. Senate. So that'll
wait. You're going to put a link to all 800 pages? That should be interesting. I read 300 of them, by the way, and then I quit.
Well, let me rephrase that. There is a sort of a short version that I found that was from the U.S. Senate. Yeah. If you really need to sleep, read 800. For the record, I read 0 of the full report.
Well, you don't have kids. I have to hide at times, and sometimes that's what...
Daddy's got a small book to read. And then put 800 pages in front of him. All right, so on that note, let's jump to another topic, and this is something that you wrote in our monthly commentary, which we just released a little bit about, and that is head fakes. And the market is what it is. We had a 32% decline, and then a 20% bump, whatever it was, and then the market started rolling over a little bit again. So let's dig in on this.
So this got me fired up a little bit because the Wall Street Journal put out a tweet, and the headline was that the new bull market has begun. Dow rallies 20% from lows 3 days ago. And so two things come to mind. Number one, these outlets need to stop hiring 20-year-olds to write their headlines, first and foremost. And number two, it start getting me thinking about the definition of a bull market. And you and I agreed that that'll be a topic for a future podcast, and I want to write a blog on it because I think there's a lot of misinformation, or maybe not misinformation, different definitions. There's no right or wrong answer here. And so we wanted to go back and say, look, Are you aware of the multiple head fakes, and we call it head fakes, but bear market rallies that have happened over time? And you go back to the Great Depression, there's astonishingly 20 to 40% rallies on the way down to a 85% decline on the S&P 500. And for those of you who think Great Depression stats are useless, let's fast forward 2000 to 2003. There were 4 separate rallies of 19, 21, 21, and 21%. On the way down to a 51% drawdown. And so it's, my favorite investment saying is always, when in doubt, zoom out. I've mentioned that multiple times because you just can't get caught up in these rallies. Yes, they're impressive. They're 20% great, but we're still in the downtrend. We're still in a bear market. And, we just wanted to highlight that you got to understand that these things are normal, these head fakes or bear market rallies.
Right. Well, this is one of the, like I said, I was actually excited when I saw the commentary because it was a little bit different flavor than some of them you've done before. Same structure, but a little bit different content approach. One of the things I wanted to point out is that we're going to put a link in the show notes for the sign-up ability if you are not getting our monthly commentary and you're an advisor and you would like to receive that. Certainly you can go to the show notes once this is released next week and sign up. We'd be glad to share that with you on an ongoing basis because, again, knowing how many different things that I've seen in my history and due diligence and so forth is the fact that every single commentary you put in, what's, your take, what's positive, what's neutral, what's negative, and really dig into that and what a conclusion is. So it's a little bit more definitive than folks that are just saying, well, the market is up X and XYZ is a broad, BS. You actually say something and you give your opinion and stick to it. So on that note,
whether right or wrong.
Yeah, well, yeah, and the reality is sometimes you highlight at the very beginning, maybe 3 months ago, you made a statement that turns out to not be. It just didn't turn out to be the way you expected.
Well,
and you
listen,
admit that,
I'm going to do that. I'm going to go back and I'm going to, there's 17 years of commentary. I'm going to go back and find every single thing we said that was wrong because, if you're going to take a stand, it's not always going to be right.
Right.
So anyway, moving on.
All right, so moving on. This is one that I get pretty hop on a soapbox for. And that is a phrase that's been used the last 2 or 3 market iterations where we've had upheaval. And that is, it's a new paradigm. Now, I hated that phrase, but I think in this particular case, I'm going to pick on something where I think it does actually fit. And that is working from home. I think there's going to be a major change within the next 12 months when we're past some of this, where people will work from home. They will want to do more things from home. And whether it be advisors, right, for folks like those listening, maybe you end up meeting more clients via a web type conference call or some other iteration rather than driving to their house or them driving to your office. Manish, do you think you're going to see some things like that in a similar fashion?
Yeah, I think businesses, especially, let's pick on someone that we work with, right? We are back office technology partners, Orion Advisor Services. Mm-hmm. And within a short amount of time, they were able to send everyone home because they were forced to. We haven't seen any service disruptions at all, and things have gone smoothly. Now, if you own that company, all your employees are home, you come back to this humongous office that you're paying so much money for. At what point do you sit back and say, this is a huge spend. Why do we even need this anymore? And that may be across the board, right? You and I were chatting about car dealerships,
right.
And will Carvana now take over? That may be a little different because you want to maybe touch the product. So maybe services, obviously, gyms, acupuncture, things like that. But the things that you and I do on our daily basis, whether it's buying a house or notaries or things like that, it's all going to go online. So I would agree with you. I would be even more drastic with the statement. I think it's going to completely turn on its head, and 70 to 80% of businesses will not go back to their offices or drastically reduce their commercial office space.
I think there's definitely going to be a reduction, and I think it's interesting you mentioned Carvana because they were trying to disrupt the car buying process by not having to physically go to somewhere. You just go online, pick your car, and it's delivered. I feel bad for them a little bit because they were ahead of the game But now you see like Hyundai is offering on TV. They're doing advertisements where, look, you don't even have to come to us. You can buy your car. We'll deliver it, and it will even waive payments if you're affected by the lose your job or something for 6 months. So
they're starting to catch up.
Right. So instead of being ahead of the curve, all the other ones now are forced to catch up and get into that game. And I don't think there were any of them that were looking at that as a reasonable way to sell a car until now. So yeah, I mean, some of these things.
That's a wonderful point, because to your point, the established folks that have been ignoring this for a while have now been forced, right? So they got their, this made them sort of adjust their plans. So yeah, I think we're going to see so many changes along these lines.
And there you go. It's a new paradigm. All right. So on that note, what recommendations do you have, Manish?
I have something called Bookroo, and we'll put it in the show notes. Essentially, it's a subscription service for curated list of books, and you can do it by age. So if it's 3 to 6, 6 to 9. And we got this initially as a gift for our kids, and it's phenomenal, because you go to the library and it's just overwhelming to pick books for kids. You just start throwing shit in the cart. But with Bookroo, they come in and will curate a special list, and I think it's like $15 a month. You get a couple books, and so even if it's not for yourself, if you don't have kids, I think it's a wonderful gift idea personally.
I'm sorry, I had to laugh because I have this vision of you spending about 30 seconds looking at a book in the library, see if that's right for one of your kids, and then you just throw it in the cart, and you just grab two or three more and throw it in the cart.
Let's tell you how I do it. So I walk in, and I remember the last time I was there, and I go to like the B section or the C section, and just dump 5 in and leave. Like, I mean, whatever. They don't know the difference.
Yeah. All right. So on that note,
what do you got?
I've got, I like to fish. I like to bass fish. I'm going to throw out that, I've tried a lot of different combinations, some pre-made rod and reels, some I buy a rod, I buy a reel, I put them together. And I got to say, Lews, number one, is my favorite company for on either side of that equation. But the Lews Mach 2 Speed Spool is a combo. They make a number of different combinations, right? But that specific one, we'll put it in the show notes. It's the best do-all, anything I want to do, rod and reel combo. So, if you're going to, I've had people ask me, like, well, where do I start?
Can I interrupt you for a second?
Yeah.
What are you talking about? Like, what is this? Can you explain for the people who don't know? I don't know what you're talking about.
Absolutely. Well, I kept it fairly short, but I like to fish for largemouth bass, all right? You have a rod and reel to go fishing. And you can buy these different pieces, put them together, a different brand of rod than reel. But bang for the buck, I think the Speed Spool Mach 2 from Lews, it's LEW', is the best starting point. Instead of trying to figure out what goes together, it's already together. You can go to Bass Pro Shop.
I got you. So it's a rod and reel
combination. Yeah. So
I got you.
Yeah, and you can flip, you can pit. There's all kinds of things you can do. Put just about anything on the end, and it's going to work. And that's
cool.
That's worth the money. So if I had to have one, that's the one I would have. So on that note, thanks for watching. Thanks for listening. And look out for the show notes. We'll have the monthly commentary and a couple of these good links for our random podcast. Thanks, guys.
Thank you, sir. Take care, guys.